So this is part 2 of question 55. Here I will be explaining part B, which is the report writing. So if you see part B, the first one, estimate the value for Cignos before and after the tax saving in Redances. Let's start. What is the starting point for it? The starting point is the report compiled by. We are going and working in appendix first, under appendixes. So here, estimate of the value created from sell off of the equipment and the manufacturing business. First, we are going to sell off the equipment. For the sell off part of the equipment manufacturing business, the first thing is we are given the PE ratio of the manufacturing business industry and also for the Anitra companies. Okay. Anatra companies PE ratio. So what is the average industry's PE ratio? PE ratio, when you have to find out, when you're not given the PE ratio. Okay. How do you find the PE ratio? Just write the formula. That is your price divided by earnings. What is your price? That is your share price, and earnings. Okay. So for that, let's see. What was your price? Your price was okay. So Anatra company's current share price is $3 per share. Okay. So it will be 3. You see here. No, that is the average. Sorry, I'm sorry. Average industry's PE ratio you have to find out. Okay. So average industry you have to find the share price of. That is here. Currently the industry's average EPS is 30 cents and average share price is 2.4. So 2.4 is your share price divided by your EPS, because share price divided by EPS will give you PE ratio. Okay. Share divided by PE is same as PE ratio only. So that's why 2.4 divided by 30 cents. 30 cents means $0.3. So here it is 2.4 divided by 30 cents, $0.3. 8 is the PE ratio. Now you have to apply this to the Anatra companies manufacturing business PE ratio. They told that it is 1.2 times more than the average industry. So 8 into 1.2. That's why it is into 1.2, because it is 1.2 times more than the average industry. So 9.6. Value. So this is number 1, this is number 2. First, you have to find the PE ratio of the average industry. Second, you have to find the PE ratio of the Anatra. Third, what is the value from the sell-off of the equipment? So the value, you have to find what? Earnings. Earnings means what? After tax profit. After tax profit, you have to find how? First, you have to find before tax. So share of pre-tax profit. Pre-tax is number 3rd. This pre-tax word is very important. Okay. What is the pre-tax profit? 249 and 30%. Let's go and check. 30% because they are having 30%. Okay. And what is the profit before tax? How much was it? If you see here, it was 2490. So we are going to use the income statement here. From here, it is before tax, so you have to deduct your tax. Okay, you have to deduct your profit before interest and tax. 3210 minus 720, the interest you are taking off, and you are left with 2490. So before tax it is 2490 and tax is 22%. So you are taking 22%. 1 minus 22 after tax. This is after tax. After that, after tax profit, okay, this multiplied by your this 9.6 PE ratio is your value. Okay, because earnings or after tax profit always have to be multiplied by the PE ratio. That's the whole purpose why we found out PE ratio. Basically, the value you're finding using the PE ratio. So earnings or profit after tax multiply by, remember this, memorize it and keep it somewhere. PE ratio will give you the value. That's why we are finding after tax profits. After tax into PE is, this is the value from the sell-off. Coming to Appendix 2. Estimate of the combined company's cost of capital. Yes. Now how do you find the appendix? How do you know what and that order? It depends on your requirement. So if you see, your first requirement was what? Estimate of the value for the Cigno before and after Redances. So after Redances means what? After selling off and all. That means you sell off and after that you have acquired. So after you have acquired, you need to find the cost of capital, WACC, for the combined company. That's why Appendix 2 is what? Combined company's cost of capital. See, this is how you decide your appendix. It's very important to decide the order. Matters a lot. Appendix 1, that was the first requirement. Sell off value. Next, they told you before and after Redances. What is the step? Value. But for that, you need to find the combined company's cost of capital to find the value. Without this cost of capital, how will you discount? Okay, so you're starting with the intra company's asset beta. Always start with asset beta. Asset beta is the first point where you need to start from. Okay, the target company's asset beta. Always start. That is your starting point. Okay. Target company asset beta. Starting point. Okay. After that, what is, you're using that asset beta, you have to find the asset beta for Cigno company. So what is Cigno company's asset beta? How do you find that? What is the equity beta of Cigno? It was 1.1. 1.1. Using this equity beta of Cigno, you have to find the asset beta. And also that's 0.68. So now 0.68 of Antra you need to find Cigno company's asset beta, because using the two companies asset beta only you have to find the equity beta. I'm sorry, the combined company's asset beta first. So the proportion of the market value of debt is 40%, proportion of market value of equity is 60%, 40 to 60. That means 40% and 60%. Asset beta, you're using the formula. So asset beta is what? Equity beta multiplied by your equity over your equity plus debt after tax. Tax is 22%. That's why 78% after tax. And this is your asset beta for what? For Cigno company. Okay. You didn't find the combined company's asset beta yet. How are you going to find the combined company's asset beta? This is for Cigno. So you have Antra company's asset beta is 0.68. Let me circle it. You need it later. You have Cigno company's asset beta. What do you need? Combined company's asset beta. How do you find that? What did they tell you? Assumption based on market value of equity. Asset beta deals with equity only. Okay, asset beta. You're not taking debt. That's why you have to find the market value of equity of both the companies separately, of Antra and Cigno. So what is the market value of Cigno? And Antra. Okay. If you see it is $3 into 7,000 shares. Why? $3, yes. Because Antra share price is $3. Let's go and see. Yes, it is $3. Antra's current share price is $3 per share. How many shares? How many shares they are selling off? Look at the share capital, 50 cents per share. So it will be 7,000 shares. And Cigno, it is 70%. That's why when we take for Cigno, it will be 70%. Okay. So here, it is 3 into 7,000 shares. This is how you get the 7,000 shares, 7,000 million shares from your balance sheet. And then this is the for Anatra Cigno. Cigno is 60% because equity is 60 and 40. That capital ratio, that capital structure of Cigno is 40 to 60. So 60% equity, and out of 60,000 million, right? We have been given here. Currently, Cigno's total firm value is 60,000 million. Okay. So on that, we are taking only equity because it is that current value includes both equity and debt. Market value of equity plus market value of debt. Out of that, we are only taking the equity portion. That's why we are taking 60% only out of from the 60,000, which is 36. Now, asset beta, proportion of the market value of equity. Okay. So what is the asset beta of Anatra? 0.68. What is the market value of equity of Anatra? 21,000. Multiply plus market value, asset beta of Cigno 0.72. I have circled also. Market value of equity of Anatra, Cigno 36,000. Divide by the total value of equity. Market value of equity of both the company, Cigno and Anatra, which is 21,000 plus 60,000. So which is this 0.71. Now, using this asset beta, we have to find the combined company's equity beta. So asset beta multiplied by equity plus debt into after tax divided by equity, which is your equity beta. Just check this. Equity beta is more than asset beta. So technically you are right. Now using your CAPM, find the cost of equity. So equity beta into risk premium plus risk-free rate is your risk cost of equity. Using this cost of equity, we can find the WACC. So 11.86 into 60% because equity is 60% plus pre-tax cost of debt was 6% into after tax into 40 because proportion of debt is 40%. So 8.99 round up to 9%. Always it's better to round up the cost of capital, your WACC. Now once you have found the WACC, what is the next step? Because you have to find before and after the redances and all, the value. That means after acquisition, you have sell off. You have already found the value from sell off. You have found the cost, combined company's cost of capital. Next is what? Value created for Cigno company's equity holders from acquisition. Okay. It is for Cigno company's equity holders. We'll see whether it is for Cigno company. Yes. Cigno company shareholders. The value for Cigno company shareholders. Clearly they have specified from the acquisition of Anatra. Okay. So now, what do you need to find out when you have to find for acquisition? Don't we have to find the value of Anatra, the medical R&D value estimate? Yes. So Anatra's medical R&D value estimate, you have to find. That is the first step. Target company's value you have to find out. That is how you value the Cigno company's equity holders. First, you have to find the target company's medical R&D value estimate. They are now already left with the medical department, the R&D department. That value you have to find out. How are you going to find that value? They have told the sales revenue was 5%. Operating profit margin was 17.2%. Tax rate is 22%. Additional capital is 40% of the change in sales revenue. And cost of capital 9%. Appendix 2. You see why we have calculated cost of capital first? Always cost of capital has to be in the beginning before you find the value of the company. Because without cost of capital, you cannot find. That's why that was in Appendix 2. But it was not in Appendix 1 because Appendix 1, the value from sell-off, you don't need cost of capital. That you can find out without it also. Because here you are not combining. So understand the logical order, okay? Coming to 3. Free cash flow after 4 years. The growth rate is 3%. Okay, I'm not referring to the case study here and there. I'm not moving and showing you the figure because I've already underlined when I was reading the case study. So you can see, keep the case study in front of you and see this answer. You will be able to understand. Current cash flow, current sales revenue, 70% for Cigno. Cigno's only, you only have to take Cigno's proportion, which is 70%. Okay, what is the sales revenue? 21,400. This is the sales revenue. Let's see. From your income statement. Okay, 21,400 out of the 70%. Okay. So now cash flow from year 1 to 4. Next step after you have done all this basically you have just input your data. You have wrote everything here one by one. This is a very good strategy, I would say. Because you don't have to refer from page to page and keep finding, okay, where is the tax rate? Where is the sales revenue growth rate? Where is the cost of capital? Whenever you have so much of figures which you need, write it down, all the figures in one line. This is this rate, this is this rate, this is this rate. Okay. Now you don't have to refer. Using this figure, you just have to implicate here. So cash flow, next is cash flow. Year 1 to 4, sales revenue. So what is your sales revenue? Current is 14,980. On this, what was your sales revenue? 5%. Now do you see why I have included all the figures here? So that I don't have to refer to the case study here and then waste time. Multiply. Increase it every year by 5%. That's how you get 15,729 for the first year. Keep increasing it by 5% every year. Next, profit before interest and tax. What is your operating profit margin? 17.25%. So just 17.2% on this sales, because they told profit margin before interest and tax. Okay, so you should get 2713, round up to the whole number. Every year you have to apply 17.25. Tax is 22% on this. Okay, deducted. Additional capital investment, 40% of change in sales revenue. What is the change in sales revenue from year 0 to 1? It was 14,980. From here to here it was 1570. 749. The sales from year 0 to 1 increased by 749. Of that you have to take 40%, which is 299.6. That's why the additional capital is 300. Next, every time the change of your sales revenue from this year to next year, on that take 40% and you will get your additional capital investment. Coming to the free cash flow. How do you get your free cash flow? You deduct your tax and your capital investment from your profit before interest and tax. Then you get your free cash flow. On this you have to now use your WACC, 9% cost of capital, and find the present value. Once you find the present value, that is only for the first 4 years. So years 1 to 4, this is the present value. You have to find after 4 years onwards. So year 5 year onwards, what is the value? Free cash flow in year 4 is this. So on this you have to increase it by 3% because after 4 years the growth rate is 3%. Divided by cost of capital, which is 9% minus the growth rate 3% into, this is your, this has to be there, your discount factor. Okay, 1.09 cost of capital, okay, to the power minus 4. Basically the fourth year's discount factor, you are using it and you are finding this. Your terminal value, another word is terminal value. You are finding out. You are adding your terminal value with the present value for the first 4 years. So what is the total value of Anatra's medical R&D? Okay, it is this plus 25,575. This. You're adding your 1 to 4 and after 5 years onwards. Then this is not enough. You have unbundled also. That also have to be there. So total value of unit trust following unbundling of equipment and absorbing. What was unbundling? Appendix 1. You see, you need your previous requirements. Appendix 1, what was the value from unbundling? It is this 5594 that you have to be that has to be added. So 5994 from unbundling and from combining, just this. Just this. Is it enough? No. Why? Why is it not enough? Because you have paid a premium. You have paid a premium 35%. Very beginning you have been told in the case study. Okay. So what is Anatra company's current market value of equity and debt? Because you will be paying 35% on the current market value of equity. That's why you have to find the current market value of equity and debt. So current market value of equity is 21,000 and market value of debt is 9,000. How are we getting this 21,000 and 9,000? We have already done this here. If you see here, market value of equity of Anatra 21,000, from your appendix 2 itself you can take out. Okay. So from appendix 2 you can take out the value of Anatra and market value of debt 9,000. How did we get 9,000? You need to find, if you want to find the market value, you have to find the market value of debt 9,000. Let's go check. So if you see here, non-current liabilities. This is Anatra's only. Anatra's. That's why non-current liabilities is your debt. Which is 9,000. But when you are paying premium, you're only paying on the equity, not debt. Okay. Is it so? Okay. Just in order for you to clarify again, you can always refer back to your case study and read it again. Would pay a premium of 35% to another company shareholder to buy the company. So to the company shareholders, it is only the equity value, not the total value. So out of 21 million, 35% will be paid as a premium. So now the total value attributable to the Antra company's investors is what? It is 37,350. How is it 37,350? How is it 37,350? Just add all market value of equity. Okay, this plus this. Keep adding. 21 million plus 9 million, 30 million plus the premium. So that is the total value for the interest investors. Now, you only need for the Cigno company shareholder. So value attributable. This para has to be there. It's a must. The requirement asked for this only. So the value attributable to the Cigno company shareholder from the acquisition of interest before taking into account the cash benefits of the potential tax savings and redances. Value following unbundling. Okay, because this is before. Okay, so value following unbundling is this 37, this one. Okay, that means unbundling, and after unbundling the accusation. So this is the value minus the debt. You have to deduct the debt, you see, and then the price paid for intra, the premium, you have to deduct. Okay, what is the premium? Premium you have to add with market value of equity. So market value of equity is 21 for intra. On that you are paying a premium, so it has to be deducted. So this is the value for the Cigno company shareholder before cash benefits or potential tax savings and redances. 128 million only. Okay. Now, so basically you are deducting what? Basically you are deducting 37,478. Okay. Minus 37,350. The value attributable to the untrust company's investors. So the difference is the value for Cigno company shareholder. That is the value. Coming to the next, Appendix 4. What is Appendix 4? Of course, Appendix 4 is after. And this part shall be small. It should not be such lengthy. Okay, so estimate of the value created from savings in tax and employment costs following the possible redances, and also savings in tax. Because after accusation, they told they will save tax because employment and all will reduce. So what was the cash flow? 4% increase. They told it will increase by 4%. We'll see how. Good. No, somewhere it is always, it will be somewhere towards the end. Yes, so this cash flows would increase by 4% every year for the next 3 years. Okay, and they will also make a synergy. So this is after tax, the benefit, the tax benefit and redances. So the cash flow will increase by 4%. That's why they will increase the cash flow by 4% every year. Okay, this is the synergy benefit. Okay, 1600. And also the present value of cash flow, it will be 9% only, combined company's cost of capital. So the total value is this if you add up all the present values. So now you can see before the benefit and after the benefit. Okay, so value attributable to the Cigno company shareholder from the acquisition of Antra after taking into account the cash benefits of potential tax savings and redances. So before the benefit was 128, after it was 5481. Just add, that shall be your answer. This one. You see, now you're done with all the appendixes. You are in the process to write the report. So the report to the board, Cigno companies. Okay, this report assesses the potential value of acquiring Anitra for the equity holders of Cigno, both with and without considering the benefits of reduction in taxation and in employment cost. The possible issues raised by reduction in taxation and employment cost are discussed in more detail below. The assessment also discusses the estimates made and methods used. Whenever you are told to discuss the method and estimates or assumptions, you have to write in the introduction of your report. This is your introduction only. Basically, you're explaining all what you have to do. You're discussing your requirements here in your introduction. From the requirements only you are taking these points. Next, go into the assessment of the value created. If you see, it's a very long paragraph. And then we have key factors to consider in relation to the redances and potential tax savings. And finally, the conclusion. So it is just following this requirement only, the way it is ordered. First, assessment of value, then the estimates, methods used, then advising the board. So okay, the factors, the key factors to consider. So let's see the assessment of the value created. You have to use your appendixes, the numbers which you have used. Cigno estimates that the premium payable to acquire largely accounts for the benefits created from the acquisition and the divestment before considering the benefits from the tax and employment cost savings. So they are first saying before. Okay. Of course, it's a logical sense, right? That you will always talk about before the benefit of tax and redances, and then only you will talk after tax saving and redundancy cost. Okay. As a result, before the savings are considered, the estimated benefit to Cigno shareholder is 128 million. See Appendix 3. Okay. It's marginal. Marginal. When amount is very small, write it. It's marginal or it's very significant amount. It makes a lot of impact in your report. Okay. Given that there are numerous estimations made and the methods used make various assumptions as discussed below. This method, see, they have told estimations and methods used as discussed below. That means what? You are not going to discuss your methods and estimations here. You are going to discuss it below in your next paragraph, next subheading, under next subheading in your report, okay? You should not repeat. Don't redo your work. Once you have stated your assumptions here, don't make it later. Or if you are going to do it later, then don't write it here. So, okay, this benefit could be small or larger. So they are saying they have used assumptions. If your assumption changes, this small benefit could be very big also, or it could be very small, even smaller than this also. Okay. This basically what you are saying is you are giving a possibility that it could be the number is not specific. It could change also. So this is a skill of an AFM student, which I'm trying to bring out. This skill has to be there in you. You just don't stick with one answer, that you got one possible answer and this is only correct. There is no correct and wrong. There is no fixed answer. In AFM, when you are giving a value for a company, a value can range from this to that. It has a range. So that range, you have to talk about that range. You have to tell that if assumption changes, your amount can be smaller also, it could be larger also. This is a skill. You cannot be very robotic. You have to think freely. You have to give possibilities that answers could vary. It's not possible one fixed answer. Even in reality also, if you check, I have done a course also in value business valuation. I've got a certification in business valuation, so I'm able to tell this better now. That in reality, when you go for a business valuation, they're experts in valuing a company. You will never get one benefit, one single value. The value they will give you a range only. That value, when they write a report to you, they will tell that the value is from here to here, that range. And they will also give you assumptions what they have used, that based on this assumptions, these are the values. If the assumption changes, value will change. It would appear that without considering the additional benefits of cost and tax, so basically the first paragraph is without. Okay, without. This is your thing, this is your strategy, this is your technique, what you are going to write in each paragraph, how you are going to divide the paragraphs. This is your key to passing AFM. Okay. It would appear that without considering the additional benefits of cost and tax reduction, the accusation is probably too risky. Isn't it risky? Exactly, it is risky. Why? Value is very small. It could be even smaller also if assumption changes. So this is a risky strategy. So you have to bring, see, this is what You cannot memorize such answers and write these answers. This based on your assumptions only. If you see a value is very small, then make it a note that yes, it is not such a great proposal, it is risky. So the accusation is probably too risky and would probably be of a limited value to always bring it out to where you started. Value to whom? To whom? To Cigno company shareholder. What is the value? Very limited value. Coming to the next paragraph. Next paragraph, I'm seeing that it is after. So after the tax benefit and redundancy. This is your report writing. This is your professional skill. You're getting professional skills like this. If the benefits of the taxation and employment costs saved are taken into account, the value created for the shareholder is this. See Appendix 4. You're not writing. See in the report, never write your calculations in your report. Never ever. It will be in your appendix only separately later. You just have to write a figure and then just write see Appendix 4 or refer Appendix 4. That's it. And therefore significant. If you see here, this is significant. I don't know why I'm not able to write here. Significant, isn't it significant? 5609 million, just see the amount. Before you said it was marginal, now you're saying it's significant. So this would make the assumption, this would make the accusation much more financially beneficial. Yes, talk about it. When you see amount is significant, of course it will make it very beneficial. It should be noted that no details are provided on the additional pre-accusation and post-accusation cost or any synergy benefits that Cigno may derive in addition to the cost savings discussed. No details. See, when you're not given certain details, make it very clear. Write it. You are free to write it in your report. That pre-accusation details are not given, so it's not easier to compare with post-accusation. If such information is not given, write it. In this case, it is not given. Before accusation, what it was, the benefits and all. What are the costs? What are the post-accusation costs? Did they tell you? No. This should be determined and incorporated into the calculations. Have to write always. When something is not there, what is your next step? What is the next sentence you are writing? Yes, it is not here in the report given, but it should be determined. It should be included in the calculations. You can even memorize it also and put it wherever you see such scenario where it is not given. Write the sentence. It should be determined. It should be incorporated into the calculation. Coming to the third para. Third para, they are talking about what? I can see some PE ratio they're talking about. So basically they are bringing their assumptions and all also. Okay. Basing the corporate value on the PE method for the sell-off and on the free cash flow valuation method for the absorbed business is theoretically sound. Okay, PE method for sell-off, free cash flow for absorbed business, theoretically sound. Is it? Is it? Why not? Why is it theoretically sound so? Because they are saying you're memorizing it, or you have this thinking power that you can decide whether it is not sound or not. See, sell off. Okay, that business is a large business, pharmaceutical company. There are so many pharmaceutical business in that industries. So isn't it easier for you to find a reliable PE ratio for such kind of industry? Of course there is. So the PE method which you have used is good. You have not much information, and also the free cash flow for the combined company, because it is a large business. It has been in industry for many years. So free cash flow in such condition is a good method to use. So it's reliable, it's theoretically sound, because you have to talk about the methods used. Remember in your requirement, the second Okay, report writing is not like this. Okay, this is first part, so I will write first. This is second, this is third. You have to include everything and combine and write. You will not know also where my first point is ending, where my second point is ending. Are they writing any bullet points here? You're not never write reports in bullet points or write it like this, first, second, or third. It should be like this, just like this. But if I'm reading this sentence, I know that this is the second requirement. First requirement is over. What was my first requirement? Again, I will go to the requirement and show you. Value for Cigno company shareholder before and after the tax benefit and redundancy. That part is done in the report and also appendix. Yes, so done. Second, value created from above, discussion of estimations methods, estimations made and methods used. I am in this point now. If you see, it is in a different paragraph only. You can even write it in different subheading also using subheadings. But here they prefer not to use different subheading. I use it here also. That is also acceptable, as long as it is in a different paragraph. So two method you have to talk about. PE method, free cash flow. So PE method estimates, now you are talking about estimation also you have to talk about. So PE method estimates what? Value of the company based on its earnings and competitor performance. That is the job of PE ratio. With the free cash flow, now they are talking about the free cash flow. The cost of capital takes, so in free cash flow, what do you need? Cost of capital. Isn't it based on some estimates? Yes. So cost of capital takes account of the risk of the investor wants to be compensated for the non-committed cash flows or the funds which the business can afford to return to the investors as long as they are estimated accurately. Okay, this you can write it in an easy way also. Whatever method you can write that cost of capital is based on certain assumptions or estimates like cost of equity, asset beta, capital asset pricing model and all. That is also acceptable. Now, coming to the last paragraph. Okay, what is the last paragraph? Let's read. However, in practice, okay, so they're talking about reality. This is what I'm talking to you. In business valuations, what happens in reality? This is in theoretically okay. You're saying this is the value. One benefit, one value you have found and saying this is the, but in reality, exactly you will never find a true value. You will always there, it will be a range only. So the input factors used to calculate the organization's value may not be accurate. You need to bring out these points in your report whenever this is given there. What is it? Accusation. The value. Okay, last paragraph. Value may not be accurate, or it may be difficult to assess their accuracy. Yes. Isn't it difficult? There are so many things which is not known to you, such as the premium. That premium is also based judgment only, 35%. How do you calculate exact premium? Just estimate. For example, now you are using example. Always use example. Example is a very strong, it's a sign of a very strong candidate who use lots of examples. That shows that you have wide knowledge of that area, very deep knowledge. Because you're just not stating a point, you are demonstrating it through an example. That is a key. Not everyone can do this. For example, free cash flow method. It is assumed that the sales growth rate, okay, assumptions, what is it? Mainly assumptions. Because of assumptions only. The method of finding a value for a company is easy, but in reality it is not. That's what they are saying. So what are those assumptions? Also they are saying free cash flow method. It is assumed sales growth rate, operating profit margin, taxation rate, incremental capital investment can be determined accurately and remain constant. Yes, assumption only that it can be, it is accurate and also constant. But is it constant so? No, not need to be. It is assumed that the cost of capital will remain unchanged. Another assumption. From the case study, there itself they have told that it will remain unchanged. That's why Cigno's capital structure. Before and after is same only. Before acquisition, after acquisition. And it is assumed that the asset beta, another assumption. Okay. Asset beta, cost of equity, cost of debt can be determined accurately. So all this is assumptions only. The last paragraph. You might not give all the assumptions as listed here in the exam. There is a very high tendency that you might have forgot some assumptions. No worries. Still some assumptions you know. Whatever you know, write those assumptions. Don't worry too much that you have missed out on something or you didn't include all the assumptions. You might have 10 assumptions in your head, but you are not able to write all 10, maybe due to time management and all, maybe 5. Write it. It's okay. It is also assumed that the length of the period of the growth is accurate. Okay, so length of the period of growth is accurate assumption. And the company operates in a perpetuity thereafter. All these are assumptions only. All the assumptions we are listing in this paragraph. Without the PE model, with the PE model, basis for using the average competitive figure needs to be assessed. Okay. You also not saying that these are the assumptions. You are also saying what you need to do. What do you need to do? You need to assess. What needs to be assessed? Basis for using average competitive figure. Is it reliable to use the competitive figure as a basis? Needs to be assessed. Okay. For example, again an example, I told you, examiner will understand how much you have understood, whether you are a weak candidate or a strong candidate based on examples used. This skill I have seen in very few of you. Why I know this? Because I am one of those few. I always use examples. I have this very, I don't know what to say. I always use examples. Wherever I don't know what points to put, I always give lots of examples. Wherever I get a point to show example, I will give examples to demonstrate my point. For example, have outliers been ignored? What is outlier? Outlier is the one which is not in a reasonable range. It is something beyond, very extreme values. They are known as outliers. The basis for the company's higher PE ratio needs to be justified as well. Okay. If you have seen in this case study, they have told that compared to the industry's average PE ratio, okay, which is 8, Antara's company's PE ratio was 1.2 times more. But why is it more? Why that PE ratio is more? That needs to be justified. Is it justified? They told anyway why it is more? No. They have just told it is 1.2 times more. That's why it needs to be justified well. The uncertainty surrounding this estimate would justify that the value is indicative rather than definitive. Memorize this line. I would say memorize this line. This shall help you a lot. And just write it. Copy paste. Uncertainties surrounding these estimates would suggest there are uncertainties. So all these estimates are uncertainties. Suggest that the value is indicative rather than definitive. It is not definite. It is indicative. It's just an indication. And it would be more prudent to undertake. I always tell sensitivity analysis, and I have been telling this 1,000 times now. And obtain a range of values. Yes. Better to take a range of value. I have told you, value of a company is always in range of values in reality. They will never give you one single value. You can never do that. Now, what are the key factors? If you see, this is the part 3 of your requirement, the last one, third requirement. Have you seen that order of requirements in your report and also in your appendixes? This is the key. Once you understand this format, this process, this set, you have understood all the questions in AFM and you are in a process of attempting any 50 marks question. That's what I wanted to show you. Understand 150 marks question properly. Apply this, replicate this in all your 50 marks question, whatever questions you practice. You don't have to practice 10, 20 questions, 50 marks question to understand. One or two questions, do it properly, you will understand. Coming to this. Key factors to consider in relation to the redances and potential tax savings. This is a bit of theory. What are the key factors to consider? Okay, so one paragraph you can take for redances, the other one for tax savings. It is suggested that the board of directors should consider the impact of cost savings from redundancy and from the tax payable in relation to corporate reputation and ethical considerations. Okay. You need to link this with your reputation and your ethical considerations. See, ethics will come in a 50 marks question. Another important area what you have to cover is ethics. This will appear in a 50 marks question. You will get a question where you have to talk about ethics. Mostly it is in section A. At present, Cigno enjoys a good reputation. How are you saying this? That they are enjoying a good reputation or not? Let me take you to the very beginning, and here I have underlined also. Cigno performed reasonably well in the stock market, but it has also maintained a high level of corporate reputation. Okay. So at present, Cigno enjoys a good reputation, and it is suggested that this may be because it has managed to avoid large-scale redundancies. Yes. From the case study, they have told that before they have avoided all large-scale redundancies. This reputation may now be under threat. Why? And its loss could affect Cigno negatively in terms of long-term loss in revenues, profits, and value, and it may be difficult to measure the impact of this loss accurately. Yes, you cannot measure the impact of a loss of reputation. Can you do it? Can anyone say if my reputation goes down, what will be the loss in terms of financial value? How much will be the loss? Can anyone predict it? It is not easy to predict. It is beyond that. Okay, financial loss. Because see, when there's a financial loss, you can still make up on that through your strategies and all. But once a reputation is lost, you cannot bring it back with all your strategies and all. Reputation is such a thing. It takes years to build that reputation and not even a second to lose it. Okay, because there are other factors where you get reputation which is beyond your financials. It is not based on your financial value, how strong financially you are. Your reputation is built around many different areas. It is how you treat your supplier, how you deal with your customer, how ethical you are, how much you care about your society and all. It is a number of many things. Reputation is built on number of many things. It's not just on one single component. That's why it's very difficult for you to accurately estimate the impact of the loss of a reputation. You cannot clearly tell also, identify distinctly, okay, because of this I have my reputation, because of this there's my reputation is increasing. No, it is mixture of components. It's like when you make a food ingredient, you cannot make a cake you cannot make based on just one component. It has lots of ingredients in that which is mixed well, combined together, then you get a delicious cake. Like that, your reputation is also built up like that only. Okay, so now coming to the next. So here they have talked about redances. Next paragraph they are talking about tax. While minimizing tax may be financially prudent, yes, it's good to reduce tax. It may not be considered fair. Why? For example, now again example demonstrating. Currently, there is an ongoing discussion and debate from a number of governments and other interested parties that companies should pay tax in the countries they operate and derive their profits rather than where they are based. Whilst global political consensus in this area seems some way off, this is likely that the It is likely that the debate in this area will increase in the future. You are taking this from the last paragraph. Okay, read the last paragraph and link with this last paragraph of case study. This one. Important note. I'm sorry, not important note. I'm sorry. It's something where they have talked about. Yes, this one. This paragraph. Okay. So this paragraph, you need to link it with this. So they are saying there's a debate going on. Companies that are seen to be operating unethically with regard to this may damage their reputation and therefore their profits and value. Very obvious. So even the obvious things you have to write. That is it. You know that when you are operating unethically, reputation is damaged. So you're writing this point. It's obvious. Don't assume anything obvious and don't stay. Don't writing, not writing it is a big mistake you're doing. Nonetheless, given the Cigno is likely to derive substantial value from the accusation because of the savings, you have seen that 128 was without accusation. But after accusation, the value is 128 because of this benefit and all, because of the savings in tax saving. Okay, so that's why you are saying there's a substantial value. It would not merely disregard the potential. It should not merely disregard the potential savings. Instead, it should consider public relation exercises it should undertake to minimize the loss of reputation. What is this? What are you giving? You are giving advice to the board. Read your requirements here properly. Advise the board of directors. Advise. What is advice? Advice means you are giving action. What action they should do? Action. You are giving strategy action. What they have to do. So here they have to do this. It should consider public relation exercise. It could undertake public relation number one. Why to take public relation? That means going to media and giving conferences. Okay, release, press release. Why? They are good. So through media, they are saying that they are ethical. They are taking care of it. Why? To minimize the loss of reputation. And perhaps meet with the government. Meet with the government. This is the second action, second recommendation, advice. To discuss the ways forward in terms of tax payment. Two recommendations you are giving, two advices. You could give three, four also. You could give one also. But provided that you know what to advise. And your advice should be something which could be practiced immediately, which could be like, which is feasible. It should not be something which is not possible to do in reality. So in this cases, you need to be creative and think of an idea because this is not there in your textbook. This you will not get in your past paper also. Every year new question comes, you have to give new advices, new recommendations. Finally, conclusion. Conclusion should be your easiest thing because it is just your summarizing. But when I see students, conclusion is the one where people go worst. They struggle to write a good conclusion because summarization is often more difficult than to writing lengthy paragraphs. So this is a skill that means you are weak in writing conclusion. That shows that you have to work on writing your conclusion also. So the potential value gained from acquiring and unbundling Entra can be substantial if the potential cost savings are taken into account. That means number one, you are saying benefit would be substantial if you are taking the cost savings into account of acquiring and unbundling. However, basically, in conclusion, if something is very substantial, if something is of a very much importance, big, that is only you are bringing into attention here in your conclusion. Minor things you are not saying. You are not saying each and everything in conclusion. That this is this, this is this, this is this. No. You are saying that unbundling and acquiring will give a substantial benefit if cost savings are taken into account. Okay, because that is the most important thing. However, Your conclusion will always include this word however, but, in spite of. These are connecting words, use it. However, given the assumptions that are made in computing the value. Okay, because when we are calculating the value, we use assumptions. So assumptions you have to talk in conclusions always. It is recommended. Conclusion is all about recommended. Okay. This you have given before also. Just repetition. Recommended the sensitivity analysis is undertaken a range of values obtained. Whenever you're talking about company value, always give in conclusion that sensitivity analysis should be conducted and range of values. Okay, range of values obtained. It is also recommended. Second recommendation. There is not one recommendation. Don't always get mistaken that in your conclusion only one recommendation should be there. Okay, the recommendation could be more than one. Sometimes 2-3 recommendation also you can give. So it is also recommended the Cigno should undertake public relation. Say this is based on your last requirement you are saying. Third requirement. Exercise to minimize the loss of reputation, but it should also probably proceed with the accusation. But it should probably proceed with the accusation. Yes, it's giving a huge benefit. And undertake the cost saving exercise because it is likely that this will result in substantial additional value. You are ending on this note. You can also talk about government also, that they should also see whether they can talk with the government and all. Okay. If you want, you can write that in your conclusion, otherwise not needed because you have already written it before. Okay. So that's it. Now we'll take you through this. So if you have seen my video, the first part, it is 1 hour 20 minutes and this is around 1 hour. So 2 hour 30 minutes around I have spent on a 50 marks question. Explaining you all the detail and concepts. So next time when I'm going to do a question on valuation, accusation and merger or evaluation of a company, I'm not going to explain in this much detail and I'm not going to take this much time. So this should be a sole question to understand accusation and merger. That's why I took so much of time for this single question. Coming to part B. We know about professional marks. For 18 marks required an assessment of whether the proposed premium for the accusation would result in value being created or destroyed for the predator's shareholder. We're talking about the value. This required an assessment of the value of the part of the acquired company that would be sold using the price earning method. Okay, and the value of the part of the company that remained. This later calculation required use of free cash flow method discounted at post-acquisition back. Question also required an assessment of post-acquisition value of synergies again using free cash flow method. So challenge here was mainly to conceptualize how to attack the problem. It is not about what to do, it is about how to do it. We know what to do. We have to find this. We have to find the value of the Cigno value to Cigno company shareholder, but how to do it is the problem. The individual calculations were not unusual and have been tested many times before. Please see, it has been tested many times before. It is not unusual. Candidates who were unsure about the approach to take could have scored easy marks for valuing the disposal, synergies, and post-acquisition WACC. This was what 10 of the marks. So you should be able to calculate at least the WACC, post-acquisition WACC, valuing the disposal, that is the sell-off, and the synergy. This should be easy for you, even if after acquisition you are not able to find the value of the company. Second part for 8 marks. Assist asked for assessment of the meaning of number from B and a discussion of methods that have been used and the estimates that have been made. Candidates have got stuck with the numbers that had got stuck with the numbers may still have been able to get about half a mark for discussing the methods and estimates. So don't get stuck anywhere in AFM. My advice is that you will get stuck somewhere or the other. Okay, somewhere or the other you will get stuck. But don't lose hope. Don't feel that because you are struggling with numbers, I'm going to fail. I'm not able to proceed. I'm not able to do this question. At least discuss the assumptions you have used. At least discuss the methods and get the marks. Finally, the last part of B, which was for 4 marks, required a brief discussion of reputational and ethical issues associated with redances and tax savings. Now, marking scheme. Part B. Appendix 1. 1 mark. Only for 1 mark for PE ratio for the manufacturing business. Then, value created from sell-off. Appendix 3 is 3 marks. So next, everything is 1 mark. That means that shows that how accurate you have to be to find the asset beta of Cigno, combined company's asset beta, combined company's equity beta. Okay, you will not get a mark for Anathra company's asset beta. Why? It is given to you in the case study. Something which you have to calculate, for that only you are getting marks. Something which is given to you in the case study, like tax rate and all, you are not getting marks. Remember that. And it's only 1 mark for each. That means you have to be accurate. You have to be correct with asset beta, equity beta. That means you have to know the process and all to get that 1 mark also. Even mark is 1, but the working is lengthy. The process and all is complex. That's why I'm taking you through this marking scheme to show you. Combined company's cost of capital 1 mark. Appendix 3. Okay, in Appendix 3, what is it? Sales revenue 1 to 4. Even though it's 1 to 4, 1 mark. 1 mark. It's not 4 marks. It's not that in the first year if you get it wrong, then second year you will get it correct. Or you will get marks for the second year. No. First year in sales revenue, if you get it wrong, all the 4 years you will get it wrong. That means you are getting 0. You are getting nothing. You will not get that 1 whole mark. So that's why it's very sure that in the beginning, first year, you are getting the figures right. Because based on the first year, all your other figures depend. Because they are increasing. Because other years it's easy. The issue comes in the first year only, always. Year 1. Because if that year is correct, all the other years will be correct. Why? Because other years are just increasing it by a percentage. That's it. But first year, you have to calculate an amount. Like in year 0, in this case, currently what is the value, sales revenue? Year 0, you have to calculate that correctly. Because other years, you are just increasing it by 4%. That should be easy for you. So always make sure first year is correct. Because other years is not an issue. That automatically will be correct. So all the 4 years have to be correct for you to get the 1 mark. Now you see how important each step is. Operating profit again 1 mark, taxation 1 mark, 1 to 4, capital investment 1 mark. Okay. Value 1 to 4. Value from 5 year onwards is 1 mark. That terminal value itself is 1 mark. But working is so much of working. It's a lengthy working, but still 1 mark. Okay. Before tax saving, 2 marks. Appendix 4. What is Appendix 4? 1 mark. After tax and employee cost saving value. And then 1 mark for value for the Cigno shareholders after the impact. Coming to second part. Discussion of values for the equity holders, additional cost and benefits 3 to 4. 4 to 5 marks for methods and assumptions made. 4 to 5 marks. You have to discuss the values also, of course. And also the additional cost and benefits not given. You will get marks for that also. for all the benefit and cost it is not given. Finally, part 3. Reputation factors 1 to 2. Ethical factors 1 to 2. Comment on value 1 to 2. Based on this reputation ethical factors, you have to comment on the value. What would be impact on the value of the company? And finally, the professional marks, 4 marks. So that's it for this. Hope that this video is useful for you and you will make a very good use of this video for all your other questions also. So this shall be your key question for doing a question on acquisition and merger. Because hereafter in future, whatever question I do on acquisition and merger, I will be referring to this question. Okay, wherever you get stuck, refer to this question. That's why I took so much of time, slow down and did this question. I took around at least 2 or 40 minutes or 2 or 30 minutes I spent on this question. That's it. Don't forget to subscribe to my channel and do study well. And do pass AFM and make me a proud teacher. Thank you, all of you.